Good day, Junior Techies. I'm Mrs. Brimacombe. We are going to look at Chapter 7, Activity 7. An extract of an independent audit report of Susan Limited for the financial year ended 28 February 2022 is provided. So we are going to look at questions 7.1 up to 7.3. If you look at the information, we have audited the annual financial statements of Susan Limited for the year ended 28 February 2022. These financial statements are the responsibility of the company's directors. Basis for disclaimer of opinion: in the course of our audit, we established that bonuses paid to directors amounting to 15.2 million rand had not been authorized by the Remuneration Committee. Audit opinion: because of the significance of the matters described above, we have not been able to obtain sufficient audit evidence to provide a basis for an audit opinion. Accordingly, we do not express an opinion on the financial statements of Susan Limited for the year ended 28 February 2022. So remember that there are four options. An unqualified means happy, qualified means sad, disclaimer and adverse means it's a disaster. So this is a basis for disclaimer, and they stated that it's because the auditor is of an opinion that the financial statements are not reliable. They refuse to express an opinion. This will have consequences for the company. So question 7.1. The 15.2 million rand paid to the directors had not been authorized by the Remuneration Committee. According to the Companies Act, a company must have a Remuneration Committee. So explain the role of the Remuneration Committee. To prevent directors from paying themselves very high salaries. They must approve and give advice on the proposals such as fees and bonuses. So why is this committee necessary? To ensure transparency and fairness in the payment of salaries and fees, to prevent fraud, corruption and wastage, to detect mismanagement or fraudulent activities. They can compare remuneration against financial information of other companies in the industry. So question 7.2, the CEO, Chief Executive Officer, feels that the oversight should not have happened. Sometimes it does happen in big companies. She does not view it as an indication that corporate governance at Susan Limited is lacking. As a shareholder, what concerns do you have? The actions by the directors? So if we look at that, this is a disclaimer report. No audit opinion was given. It will have a negative effect on the company, on its reputation, the share price, demand for shares, bad publicity. Potential investors will lose confidence in the company. The corporate governance of the company is compromised. It's not in line with the King Code. The correct procedure of approving directors' fees and bonuses were not followed. The directors have abused their position. The huge amount paid to the directors could negatively affect the financial results, the liquidity, and the solvency and the profitability of the company. Insufficient audit evidence. The company belongs to the shareholders. They are the owners of the company, but it's managed by the directors. Directors are looking after their own interest in giving themselves exorbitant fees. If we look at the statement made by the CEO's comment is of great concern, as this matter constitutes a serious violation of good corporate governance. She brushes it off as an oversight, reading this as being insignificant. She is evading responsibility, not suggesting that the matter will be investigated. Question 7.3. One of the directors with close ties with the external audit company has decided to sell his shares back to the company at a price that is lower than the current market price on the JSE. The director owns 45% of the shares in the business. So if we look now at the relationship between the director and the independent auditor, close ties with the external auditor could be receiving privileged information about the company, possible collapse in the future, insider trading. An external auditor is expected to be unbiased and impartial. If we look at the market price and the director's shareholding, he owns a large percentage of shares. Someone else could end up being a majority shareholder. Share capital will be deflated or reduced, may result in unrealistic financial indicators in the future, smaller share capital. Market price reflects the image of the company and the demand for shares. It does not make sense to accept a lower price if you could sell these shares on the JSE and get more. The director could possibly trying to cut his losses and get out before a disaster. He has 45% of the shares, so his losses would be greater. So this activity focused on a disclaimer, audit report, what is the purpose of the remuneration committee, and why an external audit company should have no ties to a company. Thank you very much. I want to leave you with this quote. Study like there's no tomorrow, because if you keep putting it off, your studies for tomorrow, you'll probably be too late. Next, we're going to look at activity 8.